Hey guys, what's up? Welcome back to the channel. Welcome back to another video. Actually, this is not another video. It is just a continuation of the first session I had with Ambrose, which was really insightful, and I'm sure you guys loved it as well. So how much money would you say you've made trading forex, or what is the most money you've made on a single trade? Just give me an average. So in that video, we talked about, the basic things you need to know to get started as a beginner when it comes to trading forex on Octa. Now, today we're going to be covering more technical parts of forex, and Ambrose, of course, is going to be explaining some of the other things that we need to know, which includes like the indicators and some economic policies that will guide us on this journey. So you want to make sure to stick around and have fun, because trust me, I am going to be having fun. And you also need to know that this is not some sort of get rich quick scheme. It is something that you need to do consistently to get the result that you want. So you need to be patient with yourself. But most importantly, to get started, you can click on the link in my description box, download the Octa trading app using my referral. When you use that, you're going to get 100% of your first deposit. So if you deposit $100, you're going to receive a whopping $100, which means if you deposit $1,000, you're gonna get $1,000. So yeah, let's get right into the video. I have Ambrose here and we can take it from there. I know you've introduced yourself before, but just briefly introduce yourself again.
Okay, since I'm introducing myself briefly, then I'll just say my name is Ambrose Ebuka, and I will continue to teach you and guide you on your journey to become a successful and profitable forex trader. And by continue, I mean if you've not watched the first episode, go watch that and continue from there.
That's right. Go watch the first episode. I really enjoyed that conversation, and I feel like if people take their time to go through it, they will learn a lot. So let's just give it to them today again. So Mr. Ambrose, let's go.
Okay, so the first time we did a brief overview on the important things that you can use to execute a trade, some of the tools and objects here in the Octa Trader. So today I'll just start with the indicators, and then we go to time frame, and we continue from there to the economic calendar and all that. Now, coming into the charts, it might look confusing, but if you understand the market watch that we discussed the first time, the charts where your orders are going to be, and then towards the right side, you can see space feature where you get analysis from experts. You pretty much know the basic things that you need to get started, and then you can continue to improve from there. So before I even go on to talk about the indicators, Adesholamie, I'm going to ask you a question. Are you ready?
Yes, boss.
Okay, so let's say I place a buy trade, right? Is it going to come down here? I just place a buy trade right now. Is it going to come down here to open, pending, or closed? Where is it going to be?
It's going to be on open.
On open. Did you guess?
Yeah.
Did you guess?
No, I didn't guess, because when you place a buy trade, it means that you are currently in that trade. So it's an open trade.
So you know how to trade small.
Yes, now. So by the time when you close the trade, whether you've taken your profit or you've took your L, it will be under closed. Now I'm not sure what pending means. Oh, pending is when you do that limit order thing, right?
Yes.
Yeah.
You're correct. Amazing. So I'll talk about indicators now. When you're driving, right? Driving from point A to point B, and then from point B, you want to go to point C, right?
Right.
So when you're driving, you stop at point B, and then you see a traffic light, right? The traffic light tells you when to stop, when to get ready, and when to go. But you already know where you're going to. You're going to point C from point A. It just happens to be that along the way, there's an indicator, a traffic light that tells you, okay, stop here, get ready, slow down here, things like that. That's just a brief, analogy of how indicators work.
Indicators work.
Give you like a summary of what the market is doing and the direction of the market, the volume, the data, all that. The market, if the market is in an uptrend, for example, the indicator, like for the moving average, can give you a smooth direction of the market. Of course, it's going in an uptrend, but you can use the indicator to know when this uptrend could be coming to an end, could be slowing down. It's just kind of a tool that tells you this is what the market is doing. The idea is to look at indicators as a supporting tool to your analysis. Not like you just want to trade and use the indicator to trade. You should already have an idea of what's going on in the market. Then the indicator can come as an extra hand that you can say, okay, this is an extra confirmation. Now, let me show you where to get the indicator. Up here, you'd see FX. Can you see FX? Can you see it?
I can.
So when you click on FX, you see that we have quite a number of moving indicators. Here. We have the moving average, simple moving average, relative strength index, stochastic indicator, Bollinger Bands, volume, momentum, and the ADX, which is the average directional index. Now, all indicators have their purposes in the market. The popular are the moving averages, the relative index, and the stochastic. Some people also like to use the Bollinger Bands and volumes, but these two, the moving average and the relative index, are the most popularly used. Now, here's how
But what is that? Sorry, you're talking to a novice here. What is the most beginner-friendly indicator to use? Or do we just go by the exponential moving average and the relative because they are popular, or they are just the best ones to use?
So the beginner-friendly would be moving average because it's obviously we have exponential or we have simple, but it's so simple to understand, right? But good question. The moving average kind of gives you a summary of, the movement of the market, like the data that you see on the market. So let's say, for example, I put the simple moving average. Can you see this blue line that just appeared here?
The blue line, yes.
What it does is it's kind of giving you like the movement of the market.
Of the market, right?
Now, if I put it to, let's say, which time frame is this? Let's go to the higher time frames. I'll still explain what time frames are. Simple moving average, what it does is doing an average of the last 8 candlesticks on the 4-hour time frame, and then it's giving you the average, like the data. So you can see it's always going to follow
the movement of the market
because it's giving you like a summary. If these candlesticks were not here and you only had the moving average, you would know that, oh, this is how the market is moving. It's just kind of ranging. There's no clear trend. It's not moving upwards. It's not moving downwards. It's just ranging in the middle, right? As you can see. But in a situation like this, you see that it's moving where? Downwards. Now, one of the ways that you can understand exactly, and this is a beginner-friendly way to get used to moving averages is when the market is trading below the moving average, we call that a downtrend. When the market, as you can see, the moving average is up, the market is trading below it. And then there's something we call the moving average bounce. So the idea is when the market bounces off at the moving average, you sell. Another bounce, you sell. Another bounce, you sell. But again, this is why I always, I know you're already saying, you're going to start selling and buying at every bounce. But the idea, again, is to use the indicator as an added confirmation. Because let's say, for example, right, if you look here, we had a bounce here, we sold. We had another bounce here, but the next candlestick broke out of it. So if you keep selling at every bounce, right, you would have missed out on something important. And what's that important thing? The important thing is we had support level here. And then, as you can see, the market came down, tested that support level, and created an engulfing candlestick. This big green candlestick is what we call an engulfing candlestick. And it shows you that the buyers are in charge. The buyers pushed the market up. If you look at the previous times that we had a bounce, if you look here, sellers took charge, then we had a big sell-off. This one too, the big sell-off came from the sellers. You can see the sellers were in control because the red candlesticks are bigger than the green. This one too, we had indecision candlesticks. We had momentum here from the sellers.
So the bounce is where the sell kind of like when the sell and buy are like almost at the same level, right?
So the idea of trading at the bounce is when the market is trading below the moving average, it's expected that as long as it continues to trade below, it's going to create what we call high. Yes, and those bounces what we call higher highs, or in the case of a downtrend, it's going to be lower highs and lower low, lower highs and lower low, lower highs and lower low. Right? What we mean by lower highs and lower low is let me show you, so you don't get confused. The idea of a lower high is you see this high that is here because this high is lower than this previous high. This is a high. Right? And the here is low. But this place is higher. It's a high that was lower than this previous high. I don't know if you understand.
Yes, I get it.
This is also high because as you can see, it's high. It's up. It's up.
Yeah, but it's still lower than the first one.
Yes, let me put a lower low so you can understand better the difference between lower highs and lower lows. Give me a second.
Yeah, lower low. Okay, I get it.
We have another one here. And we still have another one here.
Another one.
Now, if you notice, right? If you notice, the market is low here, high here, right? And then it came lower. And this low is lower than this
the
previous low. And it created another high. And this high is lower than
the first high.
It broke out of here, created another low, right? When the market starts to move like this consecutively, we call it a downtrend. Lower highs, lower lows, lower highs, lower lows. We call it a downtrend. Now, if you combine that understanding of a downtrend and you say we're having a downtrend, the market is trading below the 200 period moving average as well, and we are breaking below each lower lows, right? Then what I'm looking for is a pullback to the top side or a consolidation for market to just slow down a bit. You know, when you're running a marathon, you have to slow down to catch your breath and continue. The market is coming up to here, it slows down, comes again, slows down, comes again, slows down, comes again, slows down, right? To the downside. It's going to just move, make an impulsive move, slow down a bit, catch its breath, continue. That's how the market trends. The market doesn't just trend, boom, and then it starts to trend. See a push, a consolidation, a push, just like that. Now, if you combine that understanding and say, well, we're having a pullback here, and the green candlesticks I'm seeing are not strong. They're not like this. They don't have momentum like this ones here. They're just we're waiting for the next bearish candlestick to take out this previous lower low, and then we join in the sell. For you to not fall victim into something like this, like if you see the market came back here and started to push up, if you had traded bounce and said, oh, let me just sell it as bounce, let me go down, you'd have lost money. For you to avoid that, this is why you have to combine indicators with your normal analysis of the market. For you to combine that, if you look here, you'll see for every time the market pushed down, we broke a previous low. Broke it. But here, we didn't break it. You can see that we came here and we bounced up. We didn't break it to the downside. We bounced up, right? To create that bounce. The idea is to wait for the market to bounce, take out the previous low, and then you continue in the sell. The same thing for here. Take out the previous low, you continue in the sell. We didn't take out this previous low here. We pushed back up.
It pushed back.
So that's one way that you can avoid, getting or being a victim to fake outs from the market. But again, a beginner-friendly way to understand how to use the simple moving average is to look out for the areas where the price would bounce at the moving average, and then you see if there is momentum. For a sell, you're looking for down momentum. For a buy, you're looking for upward momentum.
Upward momentum.
Exactly.
Yeah.
The exponential moving average is almost the same thing as the moving average. The difference is that the exponential moving average pays more detail or more emphasis on current market price. The simple moving average can give market some gaps. Let me give you an example. So we have the two indicators here. Let's set this one to 50. Change the color to red. Let's set the simple moving average to 50 as well, but we'll leave the color at blue so you can see the difference. Now, the exponential is red, the simple moving average is blue, but you see that the exponential is closer to the market.
Yeah.
The blue is farther. If you look at this trend, now, this downtrend, you see that the exponential is closer to the trend. The simple moving average is farther from the trend. The exponential acts fast. It gives you instant summary of what's going on. The simple moving average will wait to see if is that going to be a pushback? Is it going to be this? It's just a bit slower with giving you data. So if you're the kind of trader that wants to, slow down and see how the market acts before you trade, the simple moving average is for you. You would not fall victim into spikes like this that goes to the downside. All this type of spikes, because the exponential moving average will not capture that. So if you're a patient trader and you like to build more confidence in your analysis, the simple moving average is for you. Exponential is kind of like fast paced. And then another one, the second one, if you have questions, you can let me know. Do you have questions?
No.
Okay, the second and final indicator that I'll talk about, which is also popularly used, is the relative strength index. And here's how it works. In simple terms, the relative strength index basically tells you when the market is overbought and oversold. Now, when something is overly bought, like it has increased in price so much, what happens?
It begins to drop.
It begins to drop. An area of 70 and above is overbought. An area of 30 and below is oversold. So when market gets to overbought levels, what happens?
They begin to drop.
When it gets to oversold levels, when something is too cheap that anybody can afford, what happens? People begin
to buy more. Yeah.
But again, it's not ideal to use the indicators in isolation. You have to combine them with your understanding of the market analysis, areas of support. Yes. So that you don't just say, oh, you want to sell every time the market is overbought and buy every time the market is oversold.
Yeah.
An area of support. Do you know what support is?
Something to hold the market down.
Yes. It's that was a very beginner-friendly description and you got it right. So the support level is kind of like, you know, when you bounce a ball, it just bounces off on the ground and then pushes back up.
Yeah.
It serves as support. Yeah. So support level is an area on the chart where price is stopped from pushing further downwards. You know, if you buy dollar at 1,500 and dollar increases to 2,000 and you sell dollars at 2,000, if it comes back to around 1,515, won't you still buy again?
I'll buy.
Exactly. Area of support. That's how it works. So that's just introduction to indicators. If you want to understand more about indicators, at the end of this video, I think there would be a link to watch the YouTube show where you can get more.
Okay, because I feel like this is a lot of information to take in.
Yeah, there's more to it.
It will also require me to practice over and over again to get it properly. Let's now move to, I think, like the economic something like that.
Yeah, economic calendar. But before I do that, let's talk about time frames, right? Because I said I was going to talk about time frames.
Oh, yeah.
Just to briefly define time, I think we did it in the first episode, but let me just talk about that. There are different time frames of the market, right? And what this basically means is that we have M1, M5, M15. 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours,
1 day.
Right? If I switch to the 1 minute time frame, what it means is that every candlestick here opened and closed in 1
minute.
If I switch to the 5 minute time frame, it means that every candlestick here opened and closed in 5 minutes.
5 minutes.
Now, if you look here now, you're seeing the market trend downwards, right? You're seeing downtrend change to uptrend. But if I go to like the 4 hour time frame, that's just like one candlestick. It's not really, look at it, it's not really a trend on the 4 hour time frame. Yeah. So it's good that when you're analyzing the market, you go to the higher time frames to look at the overall trend of the market. Where are we trending? Where are we headed? In the grand scheme of things here, you can clearly see that we are headed where? Downwards. Yeah, use the higher time frames to get an overall direction, and then you go to the lower time frames to trade in that direction. All right, let's talk about the economic calendar. To access the economic calendar, all you have to do is to go to Octa's website, octaafrica.net, and then you come down to analysis and education, and you want to come down to analytics, and then you come down here to economic calendar. Now, if you're using the calendar for the first time, it might look a bit confusing with a lot of numbers, but Octa has made it very easy for you and very simple for you to understand. The first thing you want to do is to identify your time zone so that you don't miss out on the timing of the report. If you're in Nigeria, West Central Africa,
West African time. Yeah.
So then you want to come down to advanced filters if you're a beginner trader and make sure that all these boxes are checked. And you come down and click on apply. Now we have low, medium, and high impact news, right? Just like the name goes, low impact events or news would bring about low volatility or no volatility at all. It's the kind of news that doesn't really move the markets, right? It's just like, I don't know if you remember when President Tinubu came and said, no fuel subsidy, there will be no, and then what happens to the market? The price of fuel increased. So that was like an example of a high impact event.
High impact,
Exactly. I mean, there are other things that other people, you know, high-profile people would say that would not really shake the market, but news like that will shake the market. News about others and all that will shake the market. So that's how it really works with low-impact events, medium and high-impact events, just like the name goes. Now, most professional traders would just stick to high-impact events and then we can only see the important events for today. Like we have FOMC coming out today, interest rate projections as well by 7 p.m. But beginner traders, for the knowledge, you need to apply both low impact. So you can get the knowledge. Even if you're not going to use it, just get the knowledge about what it means. Now, how do you read the economic calendar? A brief way to do that would be, when you come to the economic calendar, first you need to identify the report and the currency that it would be affecting. So let's say, for example, I'm looking at producer price index input month over month. This MOM is month over month, YOY is year over year. I say that this is a high impact event. It's going to have a good amount of volatility. I want to take notes of it. Then I look at the event, the report, consumer price index month over month, and it's going to affect the pound, right?
Pounds.
So what I do is, it's a high impact event. I look at the previous report, the forecast, and I wait for the actual report. The previous data was minus 0.2. The experts and economists predicted 0.3, which is higher than minus 0.2, right? The report came out and then it became
0.3.
If you click on each event, you can understand the definition of each event. For example, if you don't know what the CPI is, you click on it and Octa explains that the CPI, or the Consumer Price Index, is released by Office of National Statistics on a monthly basis, and it's a measure of the consumer price inflation, which is the rate at which the prices of goods and services brought by households rise or fall. An important information in this report is down here.
Okay.
Generally, a high reading is seen as bullish for the pound sterling, while a low reading is seen as bearish.
Bearish.
And we got a high reading, and it's expected that it's going to have a bullish impact on the pound sterling. So it's the same thing for every event here. You can just click on it, understand what it means. At the last sentence, you can use it to know if this is going to be bullish or bearish for the currency in question. In this case, it's going to be the euro. We have for the Canadian dollars, dollar, the US dollar, we have for the New Zealand dollar, and all that. So do you understand how to use the economic calendar now?
Perfect. I do understand. Yeah, thank you very much. So basically, before taking a trade, I'm to use my indicators, then look at the economic calendars before now analyzing the market, right?
Yes, I like to tell traders that that's a good way to start. Look at the economic calendar so that you don't just start trading and then a central bank governor just comes and says something that takes your trade or the other way.
But if you already know that the central bank is going to come, you're going to prepare for it.
You prepare ahead of time. Amazing.
Yeah. You see, I'm a fast learner. You see,
I like that. It's awesome. It's awesome.
So now that we've talked about these things, so when we say analysis, what do we actually mean when you say, you have to do your analysis? Is it all of these things that we've talked about, or there's something else called analysis?
Well, mostly the things that we've talked about, because analysis is just you being able to identify where the market is headed.
Okay.
And you can only do that by looking at where the market was coming from.
Right, which is like the indicators that we've covered.
Exactly, with the indicators, with the support, resistance, all those areas.
Basically, this is what is going to tell if I'm to enter a trade or exit a trade.
Yep.
I feel like a lot of people lose money because they don't actually know when to, get in the trade and when to exit the trade. That is why a lot of people lose money. Don't you think so?
Well, it's a lot of things, you can do a proper analysis, but then when it's time to get into the trade, you just start to feel scared. You can do an analysis also and enter the trade, but then you feel like the market is going against you, then you just close on time. At the end of the day, traders should be able to, stick to the discipline and the strategy that they've already set in place, the plan that they've already set in place to become successful. Trading is more of, the technical aspect is in there, the fundamental is in there, but it's more psychological than, analytical or technical, because you can do everything right. Time to place the trade, then you start to feel scared. What if it goes against me because it went against me yesterday? Oh, today I've seen $100. Let me just close it so that I don't lose it. And then when you see the market now, when you close it at 100 and you see that the market was supposed to give you like 500, you start to feel bad. Then tomorrow you want to go all in because you almost missed out. So it's more psychological. So, but the most important thing is for traders to, understand the basics of forex, then get to the advanced levels where you have to build a strategy and refine that strategy to work perfect for you.
What we have just done is what a lot of people pay thousands of dollars to learn. So what would you say, or what advice would you give someone who is just starting out from the scratch? Obviously, the first thing is that the person must have watched this video. Don't just come and take my Oga's advice. So what are some of the advices that you would leave us with, aside from not, doing magu with the markets?
Okay.
Or let me say some of the things that has also helped you, some of the things that have helped you.
Obviously, the advices or the guidance I'm going to provide are steps that I've taken. I'm not going to say something that I haven't done, so I don't lead people to.
Yeah.
So one of the important things to do, which is the first thing I like to tell traders to do, is to educate themselves. Understand the basics, understand the importance understand that the educational process is important, right? You can't skip that. You can't skip that. Define your purpose of trading. Why are you trading? Are you trading for financial freedom, for family? Whatever the reason is, you need to have a purpose of trading. And then when you do that, and the goal, yes, the target. When you do that, you want to choose a reliable broker. Now, there are a lot of brokers out there, but look for a broker.
Shout out to Octa.
Exactly. I was about to give you the reasons why Octa is amazing. When traders come to the market, they just look for brokers that have instruments, that have tools. Now, if you're looking for a broker that has instruments and tools, there are a lot of brokers out there. But if you're looking for a broker that wants to take you by the hand and give you educational resources, make sure you're not just coming to use the tools, but you also understand what you're doing, because your success is the success of Octa, right? As a trader, your success is Octa's success, right? So giving you educational resources, give you tools, give you everything you need to not just get started, but to make sure that even as the market is evolving, you're continuing to learn. As a beginner, get comfortable with a demo account first. You can create that with, I think you have a link for people to create.
Yeah, my link is going to be in the description box and on the screen.
Perfect. So you can start with a demo account, and when you get comfortable, you move over to a live account. You also want to get a trading plan. Your trading plan should include your goals, your risk tolerance, your strategies, and you want to stick to being a disciplined trader. So
there's this show, I think I've watched a couple of those shows. So can you is this something that people can watch and still learn from? And is there somewhere people can continuously learn from, maybe like a group or like a channel or something where people can still get more information?
So 2 ways, right? First, the Octa YouTube show is an amazing show. I'm super excited that I was able to feature in the show and teach Tolu on how to become a profitable trader. Show how the steps.
Yeah,
it's about 11 episodes. It's about 11 episodes, and it's super packed with important information. One of the ways that you can watch that would be to go through the Octa Instagram page. There's a section in the highlights for you to can. And then you can also go to the playlist on the Octa Broker YouTube channel. There's also a section for it in the playlist. YouTube can show as well. And then you can start from episode 1 all the way up to episode 11. But I mean, Octa Copy Trader is also there for you if you want to copy traders, master traders that are trading. Just link your account, look at the traders, see the one that fits into your style, and then you can copy the traders.
For long term, you should be able to do it yourself so that you can be a master who people can also copy, right?
That's the goal.
Yeah, so I also asked if there is like a platform where, after this series, maybe places where we can always get like updated information, maybe like a group. A lot of people tend to ask if there's like a WhatsApp group, a Telegram group, and all for more information. Is there anything of such?
Yes, please. If you have the Octa Trading app, you'd get information, notifications. Also, if you follow Octa on IG, you'll also get notifications, and on YouTube as well. But if you want to, which I believe traders should do, you can't just become a trader if you're not actively engaged in a community where there are other traders that are sharing ideas. Octa Nigeria is available on Telegram. We have a lot of information that we put out there every day that can improve traders' activities, trader career. We have educational posts that we make. We have polls and quizzes. We also have live sessions there that we host from time to time, to keep traders updated with what's going on in the markets and try to get their understanding of, trading. We also have an amazing Ask Ambrose Anything session that we host every last Friday of the month, where traders can ask me anything about trading, please. Yeah, so they can join Octa Nigeria on Telegram. I think you can also put that in the description so they can just...
Yes, I will. Yeah, all right. Thank you very much.
This session?
oh my god, I love it. I enjoyed it. I mean, it's for me, when I tried this trading thing at first, at the first time I ever tried it, I gave up halfway because I realized that it was not just something that you can learn without having
Yeah.
someone who is ready to kind of like give you the details. A lot of people just want to make money off you. They give you like half of the information and they say, hey, if you want to learn more, buy my course, pay for this, pay for that. I see people say, oh, people are asking them to pay XYZ amount of money to teach them. And the funniest thing is that they don't get to teach them everything they need to know. Do you get? So this is like, I feel like anybody who watches this video and, watches it with the intent to learn something and starts their own trading journey, even if they're not able to grasp everything, at once, they have like resources that we have shared during this session that they can always go back to watch, learn, unlearn, apply and see how they get better at things. Obviously, it's not something one can start today and start cashing out. It's not like a get rich quick scheme. Yeah. So there are also certain risks involved, and people need to kind of like, factor in all of these things, the risk tolerance parts, the goals, what they are trying to achieve, and most importantly, not copy your friend. Because I know people who say, oh, because my friend is doing this, let me also do that. I don't think that is something that is reasonable for anyone to do if you're trying to go into something like this, considering that it's also like a high risk investment. All right, so thank you very much, Ambrose. It's been an insightful session. I've learned a lot, and I sincerely do hope that people who watch this video will, they will also be able to learn something and be able to start their trading journey. And I'm also going to link your Instagram handle in the description box so they can, reach out to you. I don't know, do you offer like one-on-one sessions?
Yeah, in the Octa Nigeria Telegram chat, you can have one-on-one sessions there as well.
Okay, so I'm gonna link it in the description box. You guys can join via the link and have like more one-to-one personal relationship with Ambrose and Octa. They're gonna hold your hand. So yes, thank you very much, Ambrose.
Thank you so much for having me. Thank you so much. Thank you everyone.
Love you.
Bye.
Peace out. Alright, so thank you very much for watching this video. I hope you enjoyed it as much as I did. If you have any questions, let me know in the comment section. I'm gonna be linking Ambrose's Instagram, so you can also go onto his page, ask him questions. He's one of the best. Like, this guy knows what he's talking about. I'm also gonna leave the link to the Telegram group in the description box for forex, the Octa Telegram group, so you can always ask questions, mingle and have fun while at it too. Stay safe, stay fabulous. Make sure you subscribe to this channel, give this video a thumbs up so that YouTube can always recommend my videos to you. Thank you very much. I'm gonna see you in my next one. Bye.